The market falling back by the close of yesterday's session on a pretty thin trade, but quite a distinction being seen between the performances of Cooperative Bank and KCB. We had both emerging with divergent trends, KCB falling back and Cooperative Bank closing at its 8th consecutive all-time closing high.
I think what's basically going on at the market is many of the investors are cashing in on the capital gains that they've been able to, get as far as the investment has been last quarter. And when it comes to the financial sector, I believe the rights issue that's being offered by Kenya Commercial Bank has an effect on actually what's happening, because at the end of the day, I believe it's going to dilute its, its share price at the market. But when you look at Cooperative Bank, its impressive performance has been because of its strong fundamentals, and I think its consistency in its strategy, to grow and have impressive market products. So I believe at the end of the day, with thin trading results coming out of the markets, because a lot of realignment is coming in. The market is at a critical point here. A lot of strategies being changed by investors, both local and foreign, in terms of the way forward, as they cash in on the capital gains and then look at what portfolios to actually now invest in. Looking at the agricultural sector, especially Tasini, looking at the financial sector, either Equity Bank, KCB, and Cooperative Bank, and also looking at the manufacturing industry, especially the cement companies, with especially the proposed opening of the East African market coming up in a couple of days.
Well, let's hone in there on KCB and its performance yesterday, because it was hardly unsurprising given the fact that shares were sold at 17 shillings via that recent rights issue. But the stock is cheap, versus its peers on a PE basis. So would you be buying on that basis? Because Renaissance issued a very strong critique yesterday, highlighting that execution risk is what they fear most. They've got an outright sell on the stock despite that PE that the counter's trading in at right now.
Basically, when you look at the technical analysis of the KCB share, as an investor, I think I'll hold back and try and see how the execution of the entire rights issue will actually be handled out, because at the end of the day, it's not so long ago when they had another rights issue, and given the fact that the share of the market is actually pricely cheap and a bit liquid in terms of availability of the market demand of forces, supply and demand. But my issue will be to see how the plan on how they're going to execute this, what the money raised from the rights is actually going to be used, and the complete uptake, whether it's going to be an oversubscription, whether it will be another subscription, because at the end of the day, the share price of the market has been pretty liquid for the last couple of quarters, and for them to have another rights issue coming on the heels of another makes me as an analyst wonder exactly what's really going on. And also I'll need to look at its book balance, its loan portfolio, and exactly look at its expansion strategy, especially with the East African community opening up this coming month. A lot of issues in terms of framework logistics I'll need to look into that before I can say I'm going to buy into the stock.
Well, certainly a lot of questions that need to be answered on that end. In the meantime, we saw CMC out with numbers yesterday. First a half results reflecting that it's dropped to a record 31%. Oh, it's recorded a record 31% drop in pre-tax profit for the past 6 months ending March. Your overall analysis of that number, because it seems it's their high debt levels that seems to be burdening them most right now.
I believe CMC as a company is actually being faced by a myriad of challenges. We're looking at the moment, you're looking at our weakening shilling against major world currencies. We're also looking at a strong Japanese currency that's actually eroded CMC's competitiveness and prevented it from increasing its selling price. So we've seen that increasing borrowing costs to be able to sustain its operations, and also a lot of competition from second-hand models from Japan, China, and Dubai actually coming in, and also basically how business has been in general. With a lot of increasing inflation, many people have been diverted their funds to other investments. Like buying cars is actually not it's not an asset, it's a liability. So at the end of the day, the performance for the last 2 quarters, I think will continue being the same for the remaining 2 quarters until the shilling becomes stable and the world economy has actually recovered. But unfortunately, we're coming from one international economic crisis to another, with the Greek issue, making the euro currency, plummet our local currency here. So how they're going to handle this, especially with the East African region expansion, and how they're going to handle the operational cost is actually going to determine whether they'll come out of the loss making, the dwindling profits or not.